All right. Hello, everybody, and welcome to the first episode of Pitch MENA Live. My name is Andrew Berkowitz, and I'm sure many of you who are slowly trickling in will recognize my voice from the podcast. But this is an entirely new format for us that I think you're all going to have a lot of fun with. So, what's up, guys? My name is Andrew Berkowitz, and just to show you, we are live. I don't know if you can see that. That's 8:50 or 5:50 Dubai time. And yeah, here we are. No pre-recorded webinar nonsense. We are live where 4 MENA-focused startups will pitch a panel of 3 MENA-focused sharks today. Pitch MENA Live is a 5-week, 16-team pitch competition where every Thursday at 5:45 Dubai time or 8:45 Eastern time, we're going live on YouTube and Facebook with 4 Middle East and North Africa focused startups who will each get 5 minutes to pitch their startup, with a winner chosen from each episode to advance to the final 4 on February 11th. Now, during this finale, 2 winners will be chosen to participate in a Shark Tank style pitch, which will happen live at our Ecosystem Arabia virtual conference on February 16th. And so this is a format that some people are calling American Idol meets Shark Tank for Middle East focused startups. So we're going to have a lot of fun today, guys, and we're going to have very experimental style for us. So again, guys, we'll be live every Thursday for the next 5 weeks at 8:45 Eastern time or 5:45 p.m. Gulf Standard Time. So whether you're watching right now or tuning into the recording afterwards, be sure to visit ecosystemaarabia.tv to secure your spot at the virtual conference. Spots will be limited to about 250 people in order to ensure that we have very high quality breakout room discussions. But right now we're streaming live on Facebook and YouTube. So feel free to interact with us in the comments. I can actually pull your comments up onto the screen just like this. What's up, Christina? Thank you for tuning in. All right, so I'll let you guys slowly start to trickle in, and feel free to let us know where you're tuning in from in the comments so I could bring you up here on the screen with us. I want to make sure this is a very interactive format for everybody. And by the way, guys, as a part of this mini-series, we have a very highly produced 6-episode podcast mini-series that is going to be running concurrently to this pitch competition that goes live every Tuesday morning up until February 9th, and will feature candid insights and some of the inside stories from entrepreneurs who are laying the foundation for the MENA digital economy. We have great people like Joy Ajlani from Fetcher, Sameh Tukin from Maktub, Ronaldo Muchakwar from Amazon. Just a great lineup of guests that we've secured for the podcast. So if you haven't been able to tune into episode 1 or 2 of the podcast, you can go to your favorite podcast directory, whether that is Spotify, Apple Podcasts, doesn't matter. We're on all the platforms, and search the Global Startup Movement to subscribe. So guys, before we dive into the pitch today, let's do a quick thank you to our presenting sponsor, the Export-Import Bank of the United States. For US-based entrepreneurs who are exporting to the MENA region, EXIM provides a wide array of credit terms, term financing for buyers, and more. Visit exim.gov/MENA to learn more about how EXIM can help you export fearlessly to the MENA region and beyond. So we're going to dive right into things. Oh, I see we have some people joining. Welcome from Bahrain. Never been. I was supposed to be in Dubai this year. Would love to have done a golf tour, but coronavirus shut that down, unfortunately. But maybe we can do a reset in 2021 once the vaccine comes out. But we're just going to get right into things, and I'm going to start introducing the judges to you all. We have a great panel of judges joining us, and we will get right into things, guys. So first up, I want to introduce Joy, who has become pretty much my new best friend in the Middle East region, and she is a big fish, guys. Forbes named her the #1 female founder in the Middle East. She's now turned VC. She founded Fetcher and raised $58 million for it. Thank you, Adil. That's awesome. And she also founded Bonfire before that, which was acquired by Moda Operandi. And I'm going to bring Joy to the screen right now. Welcome, Joy. What's the weather like in Dubai right now?
It is actually a little chilly, but all good. Just a little typo there. I've raised over $110 million.
Oh no, but for Fetcher or just total of your career?
For Fetcher in total, I've raised $110 million. In total.
Got it. You're in the 100 million club. That's How dare I not get that right? And you said it's cold in Dubai right now, but it's like cold for Dubai. Like I'm in North Carolina right now, and it's actually cold here.
Yeah, I mean, no, for Dubai it's cold, which just simply means we need a sweater. But that's about it. I mean, cold for us is like your spring over there.
That's true. Exactly.
We love it because it's like usually 120 degrees with like 80% humidity. So for us, we love it. Like
yeah. Awesome. And is that a real bookshelf behind you, or is that just a wallpaper?
No, this is a lovely wallpaper. The wallpaper just makes me look like I have a lot of books. So
yeah, beautiful.
Well, for everybody who's in the region, Dragon Mark.
Awesome. Yeah. All right. So our next judge is Ramzi Ismail from Techstars. He's a network lead at Techstars Europe, Middle East, and Asia. He's invested in 38 startups through both Techstars and Flat 6 Labs, and he's the former program director at Techstars New York and Techstars Dubai program. Ramzi, welcome.
Hey, everybody. Welcome and hello from the East Coast. I'm currently visiting my family here in the DC area, home of democracy.
Oh, you're based in the DC area. That's where I grew up. That's where I've been based for years. And now I'm in North Carolina because I just felt like it was a good idea, to not be in DC over the past few months, which I think is a good move.
Yeah, I'm based in Berlin typically, but I'm here visiting my family in the DC area for the holidays.
Awesome. Well, great to have you on, Ramzi. And then finally, we have Diala from Microsoft. So she is the program director for Microsoft Middle East and the founding and managing partner at Strategio, which is a management consulting firm. Diala, welcome.
Hello, everyone. Great to be here. Thanks, Andrew. Hello.
All right. So these are our lovely sharks that we have with us today, and I'm super grateful for them for their time. And we're about to introduce the startups. So let me bring you guys back over here. Before we get into it, today's episode, we're featuring a group of very exciting early stage fintech startups who are going to meet in just a second. And the judges will select one winner from the pitches today who will move on to the final four, which is scheduled for February 11th. Again, you can go to ecosystemarabia.tv to drop in your email and add it to your calendar to make sure that you don't miss an episode, and tune in next Thursday as we feature a crop of amazing education and edtech startups that are focused on the Middle East and North Africa region. It's going to be a lot of fun. So are you guys all ready to meet the founders? Why don't you give us a like in the comments if you're watching on Facebook, YouTube, wherever you're watching. It takes a lot of vulnerability, guys, to come on and pitch live to these hungry sharks. So why don't we give the founders some support in the chat? Give us a like. It also helps us with the algorithm to boost the content and make sure that more people tune in. All right, guys. So let's get into meeting the founders. First up, we have Afir, who is an Israeli and the co-founder of Resource Network. Afir, welcome to Pitch MENA Live.
Hi, nice to be here. Really happy to.
Yeah, good to have you.
Yes. So should I share my slides?
Beautiful. Let me introduce each founder first, and then we're going to get into the pitches. Finally, we have Abdel from Rasid. Abdel, welcome to Pitch MENA Live.
Hi, everyone. Thank you for having us. We are Rasid. I'm the co-founder of Rasid. My name is Abdel Qatshan.
And where are you based right now, Abdel?
We are based in Dubai.
All right, beautiful. So you're also in that quote-unquote Dubai cold.
Exactly.
All right. Next up, we have Monica from Finlet. Monica, welcome to Pitch MENA Live.
Hi guys. Super excited. We are also based in Dubai. No wearing sweaters, but still it's chilly.
Awesome. Thanks for joining us, Monica. Next up, and finally, we have Danny from Bankily, who is by far the best dressed on the call that we have here. Danny, welcome. You're muted, by the way, Danny.
Hey, how are you, man?
Good. And where are you based, Danny?
Dubai.
Dubai. So we got Dubai, and Israel. But don't worry, guys. Again, this is MENA, not just me. So the NA is going to be featured very heavily in the EdTech episode, where we have some great North African startups next week. So don't worry for the North African peeps that are tuning in. Oh, Afir, you have a little fan base in the comments. Let's see what else. All right. Beautiful, guys. And again, this whole thing will culminate in a very fun, very interactive virtual summit on Tuesday, February 16th. And so this is where we're going to have the finalists from this competition pitching live for an investment in their company. This is an American Idol format for the first 4 weeks. We're going to have 5-minute pitches from each startup, and then a winner will be chosen to move on to the final four. At the final four, we're going to have 2 finalists that are going to move on to the Ecosystem Arabia Virtual Summit. Tinashe in the comments is looking forward to it. You should be too. And it's going to be a lot of fun. So make sure you visit ecosystemarabia.tv, drop in your email. That's where you can add it to your calendar to make sure that you don't miss an episode of the podcast, Pitch MENA Live, and secure your spot at the virtual summit on February 16th. All right, guys. So we're about to bring up the slides, and I'm going to bring my man Afir to the stage. Cool. So Afir, I'm about to bring up your slide deck.
Okay, cool. I haven't used this software yet. How do I click the slides forward? It's just
I'm going to do it for you.
Interesting.
Yeah. So just pause when you're ready to move on to the next slide, and then we will get that done. All right.
Okay. Thank you, everybody, for tuning in. My name is Ofir Vigad, and I'm just very excited to share this story with you. So Resource Network and Protocol is a blockchain-based company that we're building in these days, trying to build a credit solution for small businesses that is far superior to the ones existing in the market. Okay, so let's go next slide. Yes. So just starting with what mutual credit is, because it's what we base the entire company on. Mutual credit is a ledger-based B2B deal velocity mechanism. And people have been using this since the 1930s. It's very similar to a barter, where I'll give you something and you give me something in return, except there's a ledger, meaning an accountant system in the middle that allows it to be more liquid. I can sell something to you and you sell something to her, and then she buys from me, and it all evens out with an internal accounting system akin to a currency. Worldwide, people are now doing $14 billion a year in total deal volume, and there's hundreds of fragmented networks. Each of them can be dozens or hundreds of members. Yeah, thanks. Now, talking about the blockchain side, I'm sure a lot of people here have heard about the massive explosion of decentralized finance projects, or as everyone is calling it, DeFi. Currently has $21 billion deposited, up 21,000%. And most importantly, from our perspective, has introduced something revolutionary called the ownership economy, whereby participating in these products, you earn more and more of their governance tokens, gaining influence and potential for rises in prices. Now, what we are doing in Resource is that we are combining mutual credit with DeFi. Our protocol, which is a classic DeFi protocol, you basically sign up as a business, and then we use some underwriting tactics, which I'll go over in a second, to decide who's creditworthy. Then we give you a credit line and something we call resource dollars, or RUSD, which is a cryptocurrency pegged to the US dollar. So it's easy to do trades and pricing. And every time you do a transaction, you buy, you sell, you take a credit line, you gain more and more governance tokens as a business. And then we have an app, which is engage with protocol, meaning that's where you sign up, that's where you create a business profile, that's where you offer your listings, and that's where you find people willing to do business with you using resource dollars. The problem that we're going after is twofold. First of all, there's high business-to-business credit risk for legacy solutions like banks and startups offering loans to businesses. What we do is quite interesting. You can either pay back your loan in dollars or by providing products and services to other members in the network. So essentially, you have a way lower risk of defaulting because you'll just be able to provide your services to pay back debts. If we look at what DeFi is doing today, most of the biggest products that have those $21 billion locked in ask you to collateralize your loans, meaning that you have to lock in value to get a loan. That's not really suitable for businesses. They would rather lock in something else. So we've invented this mechanism for them to get a credit line backed by their futurely provided goods and services. Now let's go to the example. The total addressable market here is massive. The emerging markets SMB demand is 5.2 trillion. The global SMB loans market is 3.7 trillion, and that comes out to almost $9 trillion. So that's definitely an infinite markets plan. So here's the use case. This is a real person called Rob that we met a few days ago. And Rob is an owner of a co-working office, and he has some Airbnb spots to offer. So he's going to take a credit line of 5,000 resource dollars based on locking in future stays in his co-working and Airbnb. Now, he pays 500 resource dollars to Alice to get some web design services. And then Alice pays 500 resource dollars to Thrive to get some online grocery. And eventually Thrive pays Rob some money to get some Airbnb and co-working services from him. Essentially, this is just a small example to show that this is like a loop circular economy. And all of these transactions would not have happened if they were just needing to do normal dollars. They would have not have either afforded or had enough capacity to do that on the normal money system. We're just creating an additional layer, like a second floor to the economy that liquidates all these transactions. Now, the way that we choose who is actually creditworthy. So the first thing called oracles. For people not familiar with that term, oracles means that you take data from the normal world and you bring it onto a blockchain. So we use stuff like credit score, bank statements, connect with your accounting software, or even if you have a good rating on Amazon, Upwork, Airbnb, all of that can use as creditworthiness report. And then on-chain, meaning inside the resource network, once you've signed up, then you can collateralize inventory. You can do transactions to get more and more credit, and you could just have a massive reputation getting 5 stars from everybody. The reason it's called elastic underwriting is because you can get...
All right, guys. Afir, your 5 minutes is up. We will be cutting people off right at the 5-minute mark. So great job, Afir. We will continue on to the next pitch when we have Finlet. So I'm going to bring Monica up to the stage. Welcome, Monica.
Hi.
Let's see. Let's go back. And you have this really cool software that I've never seen before.
It's called Pitch.
Called Pitch. All right.
Yeah.
Cool. You ready to go?
Yep.
All right.
Hi, my name is Monica, and I'm the COO of Finlet. Finlet is a financial wellness app for Gen Zs to build credit, pre-qualify for financial products, and automate their expenses. Can we move? So the world of banking has dramatically changed. Banks have great infrastructure, technology, and even the best people. Yet, 1/3 of the MENA region is still unbanked. These are individuals who are financially active, have the ability to become a part of the ecosystem, and actually want better products. Unfortunately, they don't fit the age-old boxes made by banks and credit bureaus. In addition to this, whatever offerings they have at the table are far too overwhelming and intimidating. All of this, coupled with the significant lack of financial literacy, is what's keeping MENA's largest demographic out of the ecosystem. But what if we build a bridge between these young customers and these banks, neobanks, and other financial players? Well, that's what we do. We at Finlet are enabling the next generation of consumers to become more creditworthy. The app allows its users to build credit then pre-qualify for financial products that are right for them. It allows them to categorize and manage their expenses in a seamless manner, and also learn through the bite-sized financial content that's personalized for them. The app allows its users to link their bank accounts to add accuracy in tracking their financial health. It also encourages them to build points and gain rewards by simply using their recurring micropayments, managing the transactions better, and actually consuming the content that we personalize for them. Finlet is great for banks as well because it offers them an easy, accessible credit score that helps them accurately find, evaluate, and acquire its next generation of customers. Can we move? Great, so this market we want to serve is 300 million in size, and the total value of this market is 800 billion US dollars. Well, our launch market UAE alone has 1.4 million Gen Zs. All of them have great spending power, a huge influence on what their families are spending, and huge companies are investing a huge number of US dollars in just acquiring these customers and getting them into their pipelines. Can we move? So the competitive landscape is quite interesting because we're competing with US-based credit scoring platforms like Credit Karma, CreditWise. In addition to that, we're head-to-head with local players that are giving you pre-qualifications on their platform or that are helping you analyze your financial behavior. But what really sets us apart for the Gen Z customer is the fact that our approach is super holistic and it combines both tools and content to help them build and stay resilient with their credit score. Can we move ahead? So basically, Finlet is aiming to be the one-stop shop for all its users in the financial wellness space. We hold our community very close to us, and their loyalty is the key for our success. Can we move ahead? Great, so this is how we make money. We do not charge our end customer. In fact, we charge banks. We ask them for a setup and a commission fee for every single pre-qualification of products that we do on the app. In addition to this, if they want to use our proprietary credit score, then they pay us a licensing and a recurring maintenance fee. Can you move? So since our launch in April 2020, our MVP has had over 7,000 users on the app with a 68% retention rate. We've had 3 fintechs and banks in our pipeline to work with us for the pre-qualification system. In addition to that, our current mailing list has over 12,000 subscribers, and we're growing at a 30% monthly rate. Can you move? So here's what's next for us. We've managed to get our finances automated, we've built a credit scoring tool, and in the pipeline, our plan is to scale up our in-house pre-qualification tool and add a virtual card element to it. This way, we make the Gen Z consumers of this entire region go cashless while they're building their credit score. Can we move? All of our content, design, and information is built in-house. We have a solid team that works full-time on Finlet. In addition to this, we all have 25 plus years of experience in working in the financial services sector and serving fintechs and banks. And most important of all, we all have 25 plus years on an average of experience in not having access to good financial products at the right time. And this is why we think we're best positioned.
All right, Monica, your 5 minutes is up. Great job. I think we got right to the end of it. Perfect. Great job on that pitch. And now we're going to move on to Bankium. Again, the best dressed entrepreneur on the call. Let me see where the deck is at. And by the way, for anyone that's just tuning in right now, you're watching Pitch MENA live. We have four fintech entrepreneurs who are all focused on the MENA region that are pitching 3 sharks for a chance to win a spot at our virtual summit on February 16th. We'll have the opportunity to pitch a group of investors live for an investment in their company. We're about halfway through the pitches. And next up, we have Bankium, which is a Dubai-based startup and is the challenger bank in MENA. So I'll bring Danny onto the screen now. Danny, welcome. Great to have you. You're on mute, by the way. Yeah, there you go.
Okay.
Cool.
So should I start?
Yeah, let me just bring your deck up. All right. And go ahead.
Banks are broken. They're just too slow. riddled with old school mentality, linked with legacy systems. Some of those systems have been around since before we were born. And this is why, next, and this is why challenger banks are crushing them everywhere in Europe. Revolut, N26, Monzo, they're killing it. In the US, Chime Bank, in Brazil, Nubank, in China, and financials just hit 1 billion users. Challenger banks are the new normal, except in this region. In this region, 25 million new current accounts are opened every year. And every year, nearly 25 million people are disappointed from the below par services they are receiving from their banks. Imagine you had to go to a branch to open a Facebook account, or you had to wait 2 weeks to get your on Instagram. It just doesn't work. Banks have failed to jump into the digital economy, and the gap between banks and the customers is widening every day. In fact, 71% of millennials would rather go to the dentist than go to a bank. And this is why 400,000 users have joined us on our wait list in the past 4 months. Hi, my name is Danny, and I'm the founder of Bankily. At Bankily, we are building the challenger bank for this region. Bankily allows you to open a current account and get a debit card on your phone in 3 minutes or less. We make sending and receiving money as easy as sending and receiving a message. But the difference between old school banks and us is not just speed and convenience. We have different DNA. We are natively digital. With our open APIs, Bankily is set to become a platform for other amazing startups like Finlet to provide their services. Your money just got a new operating system, and it's awesome. Last month, we became a MasterCard partner in the GCC, and this month, debit card. We are the Revolut of the region. بس نحن أهل المنطقة، نحن ولاد المنطقة، نحن بنفهم عن المنطقة. My co-founder and I have built 4 companies between us, and we have 2 exits under our belt. Our combined platforms are currently processing more than 1 million transactions per week. Together, we have more than 15 years of experience in building apps in the fintech space. And we have built an amazing team with one sole obsession: to eliminate every friction point between you and your money. And that promise you can take to the bank, our bank. I'm done.
Great. That was super concise. All right. Great job, Danny. And finally, we're going to bring on Abdel from Rasid. Abdel, welcome.
Thank you. Thank you for having me.
All right. Are you excited?
Absolutely. We're very excited to be on this platform. Thank you so much for having us.
Beautiful. All right, man. Your 5 minutes starts right now.
Hello, everyone. My name is Abdel Qachan. I'm the co-founder and CEO of Rasid. We are building Robinhood for the region. We're giving our users simple and easy access to the US market. Investing in the US market is the largest wealth producer globally. However, for the majority of people in our region, they have no access to this market. They try to access the market, the US market, through their own banks, and they realize it costing $20 to $40 to execute a single transaction. Unhappy with these options, these users look for alternatives through regional or global platforms. And there, while reducing the investment cost, they realize they're faced with 3 additional problems. First, the complex onboarding process that takes days, if not weeks. Second, the expensive account funding that only happens through wire transfer, international wire transfer that costs $20 to $40. But most importantly, the majority of these platforms, they offer their users, they don't offer users direct access to these to the US market. Instead, they offer them access through highly risky structured platform or assets called CFDs, contract for difference. With over 70% of users on this platform lose their money. At Rasid, we make our user experience similar to his Uber experience, simple and trustworthy. The user will be able to download Rasid app. In few clicks, will be able to get onboarded and receive investment account. The user will then be able to link his bank account with fund account with as little money as he likes. The user will, if the user is interested in buying Tesla, Amazon, Google, the user will be able to do so with as little as $1 through our fractional share structure. But most importantly, we give our user direct, instant ownership of the stocks. No CFDs, no structured products. Next, please. We believe there are 8 million users in the GCC market for our product today, because we know that because there's at least 6 million retail investors in Saudi market alone. This market is large and growing. Investment by Saudi funds in the US market in 2020 alone increased 6-fold. We believe this trend will continue in the future. We are very differentiated in terms of our focus on gaining our customer trust and our focus on making our product simple and easy to use. We gain our customer trust by being local and licensed in every single market we operate in, and by giving our users direct ownership in the stocks, no CFDs, no structured products. We also make our product, we're focused on simplicity for our product from the onboarding process to account funding, to giving our users access to fractional shares, and we don't require any capital for our users to start. Next, please. We already achieved significant traction to date. We already secured our license in Bahrain, Fintech license in December of last year. We're very close to securing our license in UAE. And just this week, we received a preliminary approval from the Saudi authority for the Fintech license. I think we missed a slide before this. One more, please. Yes. So people are excited about our product. We have over 1,000 users who already signed up to our wait list, with weekly signups of over 100 users. And our cost of acquiring customers is declining significantly. Next, please. We already released our product on the App Store to select number of users. The product is fully connected with the back end of broker-dealer in the US, where our users can instantly execute trades instantly and access fractional shares, and get onboarded also as easy as we described earlier. Next, please. We will charge a minimum fee of $1, and we expect our users per transaction, and we expect our users to transact between around 36 trades per year, generating around $36 per user per year. We have very busy year ahead of us. We're looking to secure our license in UAE, and we're launching our product in UAE and Bahrain very shortly, targeting 10,000 users end of this year. By early next year, we are looking to roll out our product in Saudi Arabia. We're looking to raise around 500,000 to basically roll out our product and support our marketing effort to achieve 10,000 paying customers by end of this year. We are the right team to execute on this strategy. We have very strong domain experience in this space in the region. I have over 15 financial investment experience in this space at leading financial institutions. I worked with Mohammed Al-Jamid, the head of operations for our team, to launch and operate multiple funds. And AJ will lead our effort in UAE. And Iman, because we're going direct to consumer, will lead our marketing effort. Next, please. So we are Rasid. We are the right platform to access the US market. Please try us, sign up, and download our app. Thank you.
All right. Thank you so much, Abdel. All right, guys. So now we're going to bring on the Sharks to have a little conversation about the startups. And again, this is a very interactive series, so feel free to let us know in the comments. Who do you think won? Who do you think had the best pitch? What do you guys want to see moving forward? And we're going to start bringing the Sharks into the fold now. So welcome, Diala. Welcome, Joy. And welcome, Ramsey. So why don't we kick things off? Joy, what did you think?
You know, there is a huge acquisition cost. You know, as a former chief marketing officer, right? Nobody talked about acquisition costs and how are you going to grow your user base, right? And that really is the number one concern for me, is that you can have the greatest product in the world, but if you don't have people downloading it and using it. So my big question is what everybody, seemed to miss. I think it was a little confused on how are you going to make money, right? I need to know how you're going to make money. I think it was only Monica who talked about how to make money. But how do you make money, and marketing? How do you get customers, right? The one thing that I don't want to see is, oh, we're going to do digital marketing, right? That's something I don't want to see, because digital marketing is what a VC looks at and says, oh, you want me to pay to play. And they call it pay to play, which basically means you're going to take VC money and take this net and throw it out in the ocean with venture capital money, and you're going to see how many fish you catch. But guess what? It's going to be the venture capitalists who are paying for it. So I really want to understand, how are you going to do customer acquisition? And it can't be digital marketing and Google and Facebook and influencers, because that's not, that's something when I listen to as a former CMO and be like, I'm out. I'm like, I'm out right away. I'm out.
Well, that's like that's like the corrupted VC funnel of just like put money in startup and then give the money to Facebook and Google.
Exactly. So what I want to see is I want to see that. I want to see nobody addressed it. You got a great product, but how are you going to get people to download your app? No one talked about that, right? So that's really what I want to see. Cost of acquisition, customer acquisition, lifetime value, that is very important. I can see, Diala shaking her head. I think right on.
Very aligned, very aligned there, because the technology is there, like the technology is available. I completely agree with Joy. Like, a customer acquisition is very crucial for any startup. You need to have your go-to-market and customer acquisition plans in place to approach investors and to be able to raise funds. And I would like to learn more about like their plans on raising funds. How do they plan to raise those funds? Who are they approaching? VCs, government funding, because the Middle East region is heavily funded by governments. Accelerators run by governments, especially in Dubai, Abu Dhabi, Bahrain. So we see all of this. Probably two good questions to like maybe understand the customer acquisition. Even for like Monica, I love the pitch for the Generation Z, but we would like to understand, like, are you targeting those who go to like the Arab Ivy League universities and who will have good salaries and money and jobs, and then these are the people who are going to be affording that kind of investment, or the credit scoring. So a lot to understand. I think it's probably, it's probably Ramzi would like to add some more to this. Thank you.
Yeah, for sure. Well, thanks for your comments, everybody, and for the opportunity. I think one thing I want to clarify is kind of the criteria that we're judging on. I think the criteria provided by Andrew is based on company business description, kind of how it was presented, the product and service, and the team strength based on what we're seeing. So it's tough to me to put my full VC hat on and judge them as I would a pitch deck, because there's a criteria here that we're trying to base things on. But the comments still ring true, right? I think a lot of the companies, all the companies except for the first marketplace, are B2C direct companies, right? With huge acquisition costs, huge payment and marketing, go-to-market strategies that weren't discussed or quite mentioned. And these are all also fractional and marginal or razor-thin businesses, right, that require volume to drive it. In Rasid's sense, right, the Robinhood model is based on fractions of shares and driving high volume, right? The Finlet product is based on upselling and going into further product services. The resource network is based on a marketplace dynamic that's difficult to bring together on the supply side and the demand side. And then to equal kind of currency value calibration is also a part that I had questions in mind. But going back to kind of the best pitches and descriptions, I think they all presented in a fairly straightforward flow. Obviously, timing is a bit difficult, but I got the gist of it, and I appreciate all the pitches so far.
Awesome. Well, thank you so much, Ramzi. So we're going to take about 10 minutes. You can ask questions to startups if you have specific things you want to ask. And again, for everyone that's just tuning in right now, you're watching Pitch MENA Live. This is an interactive format. These startups just came on, were very vulnerable, and pitched to these super hungry sharks who are going to pick one winner from the crop. But during question time, we're also going to feature audience questions. So feel free to interact with us in the comments. Feel free to give us a nice little thumbs up to support the startups that just came on and pitched. But Ramsey, I guess, did you have a specific question that you wanted to ask somebody? Or was it Diala? Diala, you asked Monica a question, right?
Yeah, I would like to understand the segment of those young people. Like, are they talking about people who are at university currently about to graduate, their credit score, landscape? Like, I would love to learn more. Thank you, Monica. It's fantastic.
Right. So I think that's a brilliant question, and it also ties into what Joy was talking about. When she said, how do you acquire these customers? So our customer base is anybody who's in the age group of 15 to 25 in the UAE, because that's our launch market, and then as we expand into Saudi Arabia, Bahrain, and then of course the MENA region at scale. How we've acquired these customers is actually pretty, I would say, basic, but it's the hack that's worked for us. We work very closely with NGOs that target these Gen Zs. We work with educational institutions. So we've gone around doing community-focused events with these universities and schools. When we launched our MVP in April 2020 at the bang of COVID, when people were still liking webinars. In addition to that, we've done the digital marketing, we've done the paid ads, we've done targeted influencer marketing as well. But another thing that we've done is we've taken these real customers and given them a voice and had conversations with them and have them involve them in the process of building this content and this product with us. So yeah, I hope that answers your question. I mean, long story short, 15 to 25-year-olds in the MENA region, not just the cream, but as deep as it goes. Everybody's involved.
Thank you. And how do you plan on collecting the data? Do you want to go to the universities and let them, of course it's COVID time, but you could do this to share the link, let them try the app?
Yes. So our MVP product had 7,000 people who tested the app, gave us feedback. And what you see right now, actually is interesting. The logo that you see on the event is very different from the one on the pitch deck, simply because we've taken that information through various analytics tools like Mixpanel, Google Analytics, or social media field. I'm talking about things as basic as DMs and Google surveys, and we've incorporated that to improve the product significantly. And we're now relaunching it at the end of this month with the credit scoring and the pre-qualification going live. So yeah.
Cool. Thank you, Mark.
Monica, can you speak on pre-qualifications and credit scoring? How are you doing at the moment, and what are you plugging into to kind of pull that data?
So
that was my question, Ramsey.
So what we do is we're working with two leading API providers in the market right now, which is Dappy and Fintech. What they give us access to is transactional data that from our customers' bank account directly, right? So this allows us to really see what our customers are spending on and what their patterns are. And this allows us to further categorize it and show them if they're meeting their budgets or if they're not. So when it comes to our credit scoring, what we do is we have 5 basic pillars of things that we check. Number 1 is, what is your level of financial literacy? The way the content is presented to you is in the form of learning paths. So there's a beginner, intermediate, and advanced section. And depending on how much activity you have on the app, how much you've improved your financial literacy, you gain points and gain scores. Number 2 is, how much money have you lent to someone, and how much have you borrowed, and how are you making these payments, right? Because this is automatically linked to your bank account. If not, initially you manually track this, and once the virtual card is live, you go cashless. The third thing is, if you have any credit at the moment, or if you have any payments that you're making right now, for example, a Netflix bill or an Amazon bill or any other subscription model that you're using, how well are you making these micropayments? If you're sticking to them, then yes, you get the points. If you don't, then you lose out the points. And the final element is the budgets and the quizzes that you do within the app are scored as well. So how well are you sticking to these budgets? And how well are you managing and tracking your finances? So this is how we give them our simulated credit score. And then this, of course, is used to reach out to the banks and get them that pre-qualification and reduce the barrier to entry into the actual financial ecosystem.
Awesome.
Andrew, I have one more question. Is it possible, or what's the timing?
Yeah, that's just for timing, let's kind of move on to questions for some other startups. But Monica, fantastic. Great job.
Thank you.
So yeah, so Joy, Diala, Ramsey, you have any other questions for Danny, Abdel, or Afir?
Yeah, I have a
Well,
question for Danny. I mean, I sorry, Joey, please go ahead.
No, go ahead.
I was gonna say I'd love to learn about Danny from the neobank perspective. From what I see from the just here, it feels like two of the companies will eventually overlap the territory of card, and other financial services, whether it be Fintel or Rasid, which may overlap with Danny's future bank services and products. Maybe you could speak about kind of how the current landscape is shaping up for neobanks in the region. And also there's a large regulatory hurdle by having to collaborate with the local banks there and their players. So how do you bypass that?
Okay, so first, I just want to address the issue of growth. So we have 400,000 users on our wait list that are yearning to get into our beta, and we had to cap it because there's a lot of people that are that want to participate in our beta, and it's just a beta we can't accommodate them. And the reason why, and that 400,000 users, we got them at zero marketing cost. So we went viral. People started doing YouTube videos about us to push us. And this is because first of all, we built an audience that we're talking with them. And second, which is more important, is that the pain is real. Now, for the licensing requirements and the regulatory framework, we want to push the envelope. We can't wait for the regulations to catch up to launch our product. So what we did is we kind of designed a stealth model that that uses kind of like Dell used to build his computer by using off-the-shelf components. So we use off-the-shelf licensed products to provide this the service. So the way we looked at it is that a bank has two main goals. First of all, it's a good storage of money, and second, it's a good access of money, whether you want to send money or receive money. So you do that via SWIFT network or via a scheme, which is either MasterCard or Visa. Now, the storage part is the most heavily regulated part that requires a lot of capital requirements and takes a lot of time. So we said, we don't want to deal with this. We want to become like an innovation layer in how you access that money. So what we did is that we saw that getting a BIN, which allows you to issue a MasterCard or a Visa card, is easier than getting licensed. So we got a BIN, and what we did is we developed a platform that marries an IBAN with that BIN. So our product allows you to get a card, to send and receive money via SWIFT using your IBAN, but the money will be sitting in a fiduciary account in a bank. So what we did is that we have a product that talks like a bank, like walks like a bank, acts like a bank, but it talks like us. And it is not a bank. But it provides everything that a bank does with a digital DNA whereby you can get Rasid or you can get Finlet through our open APIs to provide their services to our customers.
Thanks, Danny.
Awesome. Thank you so much, Danny. And Afir, I actually have a question for you. My first startup way back in the day was a marketplace startup. And so this chicken and egg problem that you have as a marketplace of getting everyone, getting demand here, getting supply here. What if you get demand and you don't have supply and vice versa? It's a very tough thing to do. I think marketplace startups are probably the hardest ones to build. So we'd just love to hear from you, just like, how do you solve that problem? How do you get liquidity in the marketplace? And how are you thinking about that specifically because you're offering this new kind of cryptocurrency concept?
So we actually have 3 target audiences that we're launching with, and all 3 of them we have access to without any marketing budget. One is David, my co-founder, has a network called New Mundo, which is a hospitality network similar to Airbnb for cause-led hosting. So they have like 500 resorts and hotels and stuff like that around Central and North America. that are probably going to be really interested in the second group of businesses that we have to trade with. The second group of businesses that we have to trade with is freelancers, especially crypto-first freelancers, understand the concept of trading with alternate currencies. So we have access to, I guess, hundreds of those from just our personal networks to onboard them and to be like, yo, provide some hours of design or web development and earn tokens that you can spend on hotel nights and otherwise awesome stuff. And then the third category that we are here in Asheville, North Carolina, and we have basically a network of community leaders in the Chamber of Commerce here that we're directly connected with that will be spreading this because they believe in our cause and for the value for the members. So we're estimating something like 300 to 500 businesses acquired without any marketing budget, just a lot of effort spent and time. And so we believe that once we have that, and you can use our internal currency to buy from 300 businesses, the purchasing power will make it justifiable for people that don't even know who we are to join the network.
Mm-hmm. Well, I have a question for you on the marketplace dynamic. I mean, what do you assume to be kind of the redemption rate or the repeat purchase rate for these products, right? If you have people spread all over the world and travel's limited, and I imagine these services are one-off or one or few, how do you kind of encourage redemption of the credited and recalibrated balance?
Once you join Resource, you get a credit line, not a loan. That's a really big difference. As an Israeli, I know that at least in our banking system, it's very common for the bank to allow you to go into a certain amount of minus anytime you want. You don't need to take a loan. You have like a credit line there. So once we give the businesses a credit line, I think that the first question we have to educate them on is, can I spend Resource dollars on this before I spend my US dollars on this? Because Resource dollars are easier to get back. You can get them back by selling products and services to other members from the network. So I think that it's all about educating the members into using this to cut costs. Anything that you can spend RUSD on, you should do that before USD. And so I have to say that we're going to do a bunch of stuff that doesn't scale in the beginning. I'm going to talk to every single business on the phone. I'm going to educate people, etc. I hope that answers the question.
And Ophir, is this product offering limited to the Israeli market, or are you looking at the MENA market to grow the sales in the next 2 or 3 years?
I would say that the first market that we're launching with is the Americas, because New Mundo, my co-founder's network, is in the Central and North America. We are currently in North America. We're launching in North Carolina, and the global freelancer community that I'm talking about, we're going to target people who speak English first because the product is in English and it's the easiest. Once we go for the seed funding round, we're looking to raise about $1 million soon. So once we have that, we will be able to understand which additional areas we want to target. But I do think that we're going to stay with English-speaking languages until the next funding round after that, because it's just the safer way to do business, and there's so many English-speaking businesses to collaborate with. Also, Yelp was ridiculously good to launch B2B networks with, because you can scrape so much data for free and reach out to people.
That's cool.
Also, I have a question for you. Sorry, Dania, please.
No, go ahead, Ramsey. It's fine. Yeah.
I was going to ask, does Resource Network prefer a digital-first business or offline business as well? And how do you cater to the two different audiences? The web designer versus the Airbnb owner versus the grocery store owner in your example.
Ramsey, the trick with a closed currency network is that it's all about diversity. I do not prefer any one party over the other. It's all about balance. If I have 60 hotels, it's worthless. They're not going to stay at each other's places, right? I got to have some digital marketers and web developers, and I got to have some grocers, and I got to have some hotel. We actually have a guy from the city here that delivers spring water to businesses, and he's going to go on the network. So if people can buy water, and so it's all about diversity and what we call depth. We have to have enough depth of every offering, like $1,000 of food, $1,000 of stays, and diversity, which I hope is what you were looking for.
Yep, thank you.
Awesome. Well, great question, everybody. I'm going to bring Abdel to the fold real quick. If you guys have any questions for him on the Rasid pitch, and then we will get into the conversation on who is the winner. So any questions for Abdel?
Hi, Abdel. And interesting to see Rasid. I would like to understand more about the business model of offering the US market as one of your products. Is this something that's going to be limited to what Rasid is all about, or are you going to diversify in the next 2-3 years?
Very good question. Obviously, once we come the customer, we see a lot of value add in this offering. So in addition to offering trades, we see obviously the business will evolve eventually to other things. Being able to first, I guess the next step for us after this is to link fractional shares to credit card spending. So instead of getting a discount on your credit card or cash back, you'll be able to receive fractional shares in the US, so you can build wealth. We believe we had good discussions with Visa and MasterCard, and this could be a very interesting value proposition, especially for non-investors, the millennials who are not comfortable yet with investing. So it's easy for them to bring down that fear factor and get them onboarded and link their credit card spending habits to fractional shares. And from there, they get onboarded and eventually become long-term investors to build their own wealth and wealth creation. Obviously, after that, there are other plans as well to improve the savings. One of the things we're looking to add also, once we link the bank accounts, is that to improve, people make really nothing on their saving accounts, and we have ways to sweep in and out the money to allow them to get higher interest on their savings. And we make it seamless and frictionless. So it's you basically through money markets and other products in the market, because we are professional investors, we know how that works. And these are one of the sought after kind of products in the region. Murabaha accounts and Murabaha funds are the largest in the region. So hopefully but these are exclusive to high net worth investors who can dedicate money. So now by having Rasid, we'll make this easy because you have already bank accounts, it's linked already to Rasid, and we have access to the other end, which is the investment.
Thank you. I have another question, but I will let Ramzi and Joy go for first. Thank you.
Sure.
Go ahead, Joy. I'll ask after you.
No, actually, I think the couple of questions that I was asking is when I was listening to your pitch, you were telling me you have some things pending. Can you just tell me what you have pending at this point? Just so I can have clarity on that. There are some licensing or you have pending. So tell me.
Yeah.
Yeah.
So we already secured the Fintech license in Bahrain and got approval also in Saudi, Fintech license. What's pending is now we're going full license in UAE, not Fintech license, not sandbox license, full license in UAE. So it took longer. Basically, it's a proper license and launch our product without restriction. That's what's pending. We will be securing this by end of this month. And this many times in different markets. It's just a process that we have to go as a startup to secure this. That's the only.
So at this point, you have Bahrain and you have Saudi and UAE is pending.
Yes. Saudi, we have approval. So again, we have to go through a few steps, but we got Fintech. Both of them are Fintech and full license in UAE pending.
Well, I'm gonna ask a really interesting question, which is probably off the beaten path, which I ask all startups.
Sure.
Because as a founder turned venture capitalist with my new fund, Bridge Venture Capital Partners, the question I always ask startups, and I'm going to ask you, how do you see your exit?
Very good question. I come from private equity myself, and being on the founder side now, obviously we will scale this business. We know this market well. We have key members who really worked here in startup culture. We're looking to scale this to over 1 million and many millions actually, but for now our target is 1 million. We see our exit through potentially. I mean, obviously, I wouldn't give you the IPO story and looking to scale and become a dominant player to acquire other players. But one potential target is for other players like Robinhood and others looking to expand the region by proving our ability to acquire customers at much lower cost than Robinhood. And we have metrics to answer earlier comments about CAC and all that stuff. We have metrics to show that our ability, and we have to prove that and show these numbers long term. Our ability to acquire customers, because we are very segmented, we know specific markets, is much lower than Robinhood if they want to do it themselves, and it will be a good acquisition target for these players. We see ourselves probably very focused, similar pure play acquisition is probably like Robinhood, like Uber, Kareem story would be replicated here for us with Robinhood and others.
Okay.
Abdul, a question on the Robinhood payment method and kind of the payment of order flow that's been quite risky for Robinhood users, right? Because they are purchasing from Citadel, and then have that price come back to them. How do you manage that risk? And then how do you also manage the limited user currently that would attract to this model? Because I think obviously this is a very, again, thin margin business that requires a lot of volume and up services. So how do you kind of view that process from the first million?
Sorry, Ramzi, you broke up a bit when you asked the question, your voice.
The business model, so the payment of order flow that is used to purchase stocks from third-party providers, and that's been a big risk here, and that's fine by the SEC, Robinhood. How do you create a secure dynamic for your traders?
Absolutely. So our broker dealer is the largest in terms of size. Actually, they serve over 13 million users, almost like the size of Robinhood. They at the peak, at the height of the financial crisis, recent one with the COVID and the big volume, Robinhood service got disrupted, and while our partner did not lose service. So we have good partners in the US, well known, and they are actually the partners for Revolut Bank and Square. And they build the business round up fintech focused, technology focused, investment focused. They just made acquisition recently. So the partner is one part. Second is that we don't also in terms of we don't make money through trade flow or trade flow as Robinhood. So we allow ourselves to charge that fee. So it's not free, but for that we offer service with the partner. Through the partner.
Awesome. So if you guys are just tuning in, you're watching Pitch MENA Live. This is a 16 startup competition. We go live every Thursday at 5:45 Dubai time, and we are just about to the point where the judges will select a winner. But to be sure that you don't miss next week's episode, and then you can tune in for our podcast mini series that's running concurrently to this every Tuesday. Be sure to visit ecosystemarabia.tv, drop in your email, and then you can add it to your calendar to ensure that you can participate in the series and to secure your spot at the virtual summit, which will occur on February 16th, where we're going to have some interactive breakout discussions and really unpack a lot of the key themes that we've touched on during the podcast mini series and during the live pitch competition. So really excited to have you all on board with us. But now we are going to bring on the judges, and we're going to have a little discussion on who the winner is for today's episode. So Diala, Joy, Ramzi, I don't know if you guys want to have a conversation, if it's like clear in your head, like, you know, who stands out to you as a winner, but I'll kind of hand it off to you guys. And if necessary, I'll be the tiebreaker, but I don't think that we'll need that.
Are we doing this live, or are we gonna?
Yeah, no, we're doing this live and for all to see.
Yeah. Okay.
Oh, I don't know.
No hurt feelings, by the way.
I don't know. This one's tough.
Yeah.
I think first I want to thank all the founders for jumping on stage. I think all of us to be out there and come on here to in front of sharks and pitch their business. And then that drive. Thanks for being here. But we have to be critical because that is our jobs.
Oh, no, for sure. I mean, look, as a former founder of 2 startups, listen, now I'm on the other side, right? So I'm on the other side, but it's a process. Pitching is a process, and getting traction is a process. So I tell everybody out there, really good job, but just keep fighting the good fight. People always say, oh, you look at all the success stories, but nobody really remembers. No one talks about all the doors that were slammed. So I always tell everybody, don't look at the successes. Believe me, behind every successful entrepreneur is 1,000 doors that were slammed in their face. So I want to thank everyone for taking the time to be here today.
Same here. Thank you for the courage to be here. Ophir, Monica, Danny, and Abdul. Very delighted to meet you. I love your enthusiasm and your energy. It's fantastic. Keep it up. And like the Middle East in particular is like untapped market. So much to happen yet. It's gonna, well, it's estimated that the whole market, the industry will grow into $2 billion in the next 2 years. So keep your hopes up. You will find some funding. Just keep the technology going, keep the customer acquisition and go-to-market strategy in place, and all the best.
Awesome. So what we're going to do is I want each
With
of
that
you
being said, kind of going
Real,
down to 3 points.
real quick, Ramsey,
There you
what
go.
I'm going to do is I'm going to go, each of
Go ahead.
you are going to tell me who you think the winner is. If we're all on the same page, then that's it. They're the winner. If not, we're going to have a little bit of a deliberation, have a conversation of why you think, you know, why you chose what you chose. And then, you know, we'll keep iterating until we're all in consensus of a winner. So Ramsey, why don't you kick us off?
Yeah, I
Drum
mean,
roll.
based again on the criteria, the 3 points, I like Fintech. Fintellect's pitch was quite clear. I think the value proposition was interesting as far as content and support for Gen Z financiers. And then the presentation and pitch and kind of team presentation was all there. It's missed a bit clear on what product Intellect was the choice here, but again, all winners in their own right.
And by the way, so Ramsey's based in Europe right now. So let's all just like state the fact. Europe has the worst internet. You know, US super clear, Dubai super clear. Europe is it.
Very true. Very true.
Yeah. All right, Joy, what do you think?
Ironically enough, I agree with him. That was my choice as well. You know, I thought she did a great job pitching. I think she's got a clear value proposition. I was a little shaky still on the customer acquisition side. You know, I think she's still figuring that out. But I liked her pitch. I liked her presentation. I liked her. Funny enough, she's not a founder.
She's a CEO.
So that was something that made me feel a little bit like the founder didn't come today. She should be a co-founder because she speaks very eloquently about the company. So if the founder is out there, so that was something that made me feel a little bit like, why isn't the founder here? Like, you know what I mean? So because of that, I'm a little bit, on that. So that was my first choice, but I'm not 100% convinced because of that reason.
Interesting. All right. Well, Diala, why don't you close this out? What do you think?
It's really tough. I really loved Resource for the fact that it's B2B, and B2B have kind of like really proved to be more like proven concept to go out there. Blockchain is also like a very good technology to leverage. So my vote would go to Resource first, Ophir. And I think I'm a big supporter of female founders. I loved what Monica has done there. And I think we need to focus on the next generation because they are like the customers that we also need to leverage, which hasn't been done very well in the Middle East region. And there's like a niche there. Like Experian is a good example for them to look at, but they can implement it within the specific segment they're looking after. So I would say, yeah, these are my picks.
And, you know, just one of the comments I didn't get a chance to say is credit scores. You know, as you see companies like Tabby and all these guys who are doing, you know, buy now, pay later, you know, how do you accumulate the data, right? And how do you get access to that data is still a question in this region, right? Where in the United States, you know, you make a phone call, they've got data and it's accessible to everyone. So I'm a little concerned on figuring out someone's credit score here. Which is a reason why Tabby scares me. Everybody loves it, but it scares me a little bit because I would love to see how you come up with a credit score in a region of the world where data is so inaccessible, right? You know, so
but we need to create the change. So let's that's why I'm rooting for them.
I'm rooting for them too. I'm just making that comment.
Yeah.
All right. Well, it is 9:59 Eastern time. So we're going to do one more official certification. So whatever you say right now is your official certified answer that we're moving forward with for the winner. So Ramsey, what is your official certification after that? conversation?
Fintech and Monica.
Joy.
I'll put my vote for Fintellect if she guarantees that the founder is going to show up. But if not, then yeah. So
All right.
How do I do 1 foot in? Because I'm a big supporter of women founders, but ones that show up. So how do I put 1 foot in? 1 foot. I mean,
Monica, so we can see Monica. Look, give us a thumbs up if we can get the founder on during the next pitch. Oh, that's a thumbs up. All right, there you go, Joy. And then
how about a thumbs up for making Monica co-founder? Thumbs up for because she speaks very well.
It's sorted. Like Joy has solved the problem. So my vote would go to female founders. Like it's just we need them in the region, to be honest. So and it's the business concept is fun. Is really needed in the region. It's a niche market. I support Fintech.
All right, Monica. Well, congratulations. Give us like a little sign-off victory speech. Anyone you want to thank?
Thank you. I will thank my co-founder or the founder CEO. She's actually recovering from COVID, which is why she's not here.
Oh no!
Right.
Okay.
Yeah, she's still recovering. But I think thank you so much for showing faith, and we're really excited, and we hope that you get access to the product by the end of the month, and we'll be in touch. We'll share the demo and whatnot. Thank you, guys. Thank you so much.
Women supporting women. That's the future.
Thank you.
All right. The comments are super excited for you, Monica. Well, this has been so much fun, guys. And for all of you tuning in, next week, we're going live again on Thursday with a group of fantastic edtech startups. And again, I don't want to feel like the N in MENA is being left out because I know we're a lot of me this episode. But we're going to have we have a Moroccan startup, we have an Egyptian startup, so it's going to be a very diverse. And Joy, you'll be happy to hear we have some great Palestinian startups as a part of this. So yeah, it's going to be a lot of fun. So guys,
from the West Bank? From the West Bank?
From the West Bank. I'm not 100% sure. Let me loop back around and double check, and I'll get back to you on that.
Well, let's give a thumbs up for our Israeli guy who's surrounded by everybody from Dubai. So
yeah,
thumbs up and for participating and being part of our panel and pitching and we appreciate you being here.
Awesome. Well, I'm gonna bring everyone on the screen to say goodbye. So Afir, thank you so much. Annie, thank you. Abdel, everybody.
Thanks everyone.
Thanks everyone. This is awesome.
Thank you.
Thank you. It's really awesome. Thank you.